Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end.
Welcome back. Your dreams were your ticket out. Welcome back to that same old place that you laughed about. Well, the names have all changed since you hung around, but those dreams have remained and they've turned around. Who'd have thought they'd lead ya? Who'd have thought they'd lead ya? Yeah, where we need ya. Yeah, where we need ya. The tease him a lot, 'cause we got him on the spot. Welcome back. Welcome back. Welcome back. Welcome back. Welcome back. Welcome back. Welcome back.
I'm back. Hey guys, I'm Michael Glass from michaelglass.com, helping you, my friends, my followers, my family members make intelligent decisions about your investing. Took some time off, I'm rested, I'm rejuvenated, I'm ready to provide you the best information you need to make your investing decisions. With that said, let's begin. This week in the stock market, we saw the Dow Jones and the Nasdaq down ever fractionally, the S&P 500 up just 2 points. So for the most part, we had a wash week. However, as we look at it over the year, the Dow Jones is up a little over 7%, the Nasdaq is up a little bit over 14%, and the S&P 500 is up over 12% for the year. Now, the big story this week, of course, was Hurricane Sandy. The market was closed on Monday and Tuesday because of Hurricane Sandy and the devastation that it brought to our Northeast. Certainly our hearts and our prayers go out to the family members, whether you've been affected or someone you know has been affected. And we know that our great country will come back better and stronger. So with that being said, Hurricane Sandy was one of the big drivers of the week. We really didn't see a lot happening overseas. Keep in mind, tomorrow we'll have our Forex video to really talk about the Forex news and what happened overseas, but we really didn't have anything overseas that affected our market this week. On the corporate side, we are in the middle of earnings seasons. We saw Priceline beat expectation, but the one that caught my eye the most was Groupon. 1 year ago, at this time a year ago, Groupon had its IPO, and this week, as we reached that yearly anniversary, it's reached an all-time low, just above $3. Now, what was the big driver this week? Well, of course, yesterday, Friday, we had our non-farm payroll numbers. It came in at about 170,000, 171,000 above the expected 120,000. Unemployment did uptick to 7.9%, still below 8%. This is the third month in a row where we saw job production over 170%. For the most part, it looks like the market perceived it as a positive information. Now, going into next week, we really don't see earnings that's going to really move the market one way or the other. As far as economic data, we do have on next Friday consumer sentiment, which can impact the market one way or the other. Let's go ahead and pull the chart so we can get a visual representation of what happened this week in the market. As we get to our market simulators, we start off with the dollar. And the one thing I guess I want you to see with the dollar is look at the support at 79. A lot of support in here at 79. and it definitely seems to be strong support. However, we're also not getting ourselves back above 81 also here recently. Of course, a lot of it has to do with the QE3 and the weakening of the dollar, but at least we're finding that support in here at the 79 price level. So the dollar is basically sideways. So if the dollar is sideways, what's gold doing? Well, as the dollar fell back to 79, we saw gold rise right on up here. But it's starting to go a little sideways. Looks like it's range bound now between 1660 and all the way up to 1800. I'm going to say sideways right now, but we'll see what happens the next time it comes down here to the 60-70 price range. Finally, crude oil. The thing about crude oil is that we're not seeing that direct relationship with the price of crude oil and the pumps. Gas is still high, but you can see crude oil has come down back to some of the lows. And you remember this summer we had gas at $3, and yet gas is still at $3.50 as it's coming back down here. So not really seeing that correlation right now, and certainly Hurricane Sandy's not going to help anything in the Northeast. But it's in the downtrend, and our ultimate support is going to be, look at $84 to be a price point to watch, and of course $80 also. So as we begin by looking at the S&P 500 on the daily chart, there's a couple things I want you to see. Obviously, we see this very nice uptrend that we had going on mid-May up until about September, and then we topped off here at about 1470. Since September, we've kind of gone sideways, and here in the month of October, we've head down, and so now we'll see what the month of November has brought for us. Of course, you know, there's always the legendary Santa Claus run. We'll see if we get that. But what I want to notice here are two things. First of all, we're sitting here at the resistance of the 50 moving average, and we're above the 200 moving average. So we're at resistance at about 1430, 1429. Again, the 50 moving average. That's where we're sitting at, and that's where we fell back to. And we've got support underneath us, the 200 moving average. You can see when the S&P hit the 200 moving average here, we bounced. Good psychological strength there in the 200 moving average. We can see our indicators coming down into our oversold land, trying to head back up. We'll see what happens. Now, when we zoom out a little bit, and we're just going to go straight to the monthly, we'll see a couple things. First, let's go ahead and zoom in for us. We see real clearly the sideways price action here and the November potential. If we break October's low, we have to be concerned about a move lower. Again, we're pausing. We're digesting what we want to do here at this 1430 price level. We can see both of these wicks here up at that 1470 price level. So if we break October's low, that's definitely something to be concerned about. And on a monthly, we can see we are sort of overbought, closer to overbought than oversold. Now, what's interesting is if we switch over to the NASDAQ and come right on back here to the daily chart, what we'll notice is that the NASDAQ is already sitting at the 200 moving average. Now, the NASDAQ really led us for 2012, really 2011, 2012. Past 2 years, the NASDAQ's been leading us. And where the S&P 500 kind of went sideways and fell off, you can really see a downtrend here throughout the month of October and here as we start with November. Again, we bounced off the 200 moving average, and the NASDAQ is trying to bounce once again off the 200 moving average, and it's a little bit away from the 50 moving average. So my point being is that the NASDAQ's leading us, and it's already at the 200 moving average. Wonder if the S&P 500 is going to head there also. But once again, on our indicators on the daily, we can see a little bit of oversold price action there. So hopefully we'll see, for the bulls, the 200 moving average stand up to be support. When we zoom out to the monthly and take a closer look, what we see is instead of having two side-by-side candles, we see the October candle already pushing through September's. And we're seeing whether or not the November candle will push us below also. And again, we've got plenty of room to run down to the 50 moving average, let alone the 200 moving average on the monthly. So some potential weakness here. Don't know if we're going to get that Santa Claus rally. Our monthly indicators are coming out of overbought. But it's definitely something to watch here in the month of November. As we come to our market leaders, we see a couple things. First of all, as we talked about earlier about the NASDAQ possibly leading us and moving lower. As I come here and start in an Apple, what I want you to see, obviously we had this beautiful uptrend hitting a high over $700, but notice the NASDAQ has already actually broken the 200 moving average, whereas the NASDAQ is sitting at it. Apple has already broken it, so there's definitely some concerns there. And the iPad mini event really didn't have the luster as the iPhone 5 event. And if you were to ask me my personal reason, if you want me to go out of the technical analysis and get to my personal reason, you guys all know I'm a big Apple fan. I think Apple mispriced it. Pricing it over $300 still makes it over $100 more than the Google Nexus and the Amazon Kindle. Now, the Amazon Kindle is a different environment. And, my friends and I talk about that. With Apple, you're buying the environment, not necessarily the media or the hardware. And that's what Apple's known for. The user interface, the user engagement is usually better than other places. However, $100 is $100. And so for myself, you come to my house, I've got Apple products all over the place. But my son's birthday was a week ago, and I bought him a Google Nexus. He's not a power user yet. He loves YouTube. He loves, those things. But he doesn't need if you're a power user, I think you need an Apple. You need the stability that Apple brings. Pricing it over $300, there was no sense for me to spend another $100 for someone who's not a power user like that. And so I got him a Google Nexus, and he that thing hasn't left his side since he bought it. My point being, I think they overpriced it. So does that mean they're going to have to lower the price of iPods, touches, in order to bring down the price of iPad mini? Maybe. But at $329, who wouldn't just pay $70 more to get the iPad 2? Doesn't make sense. Off my rant. Apple weak, bearish. Amazon moving up, trying to come back to this support level here at 220. We'll zoom in a little bit so you can see that a little bit better. Certainly some weakness there. That looks like that was earnings related. Trying to get back up to the 50 moving average, but you can see Amazon is not below its 200 moving average. So Amazon, I'm just going to say sideways. Our good old buddy Facebook. We'll zoom on in here. Facebook, they also had earnings, had a nice little earnings surprise and gapped up. But you notice they gapped up where to? They gapped down over here. That's just why you draw your lines. That's why you chart, because it's amazing how some of these things just, show relevance at a later date. And now we're pulling right on back. I would say Facebook sideways. The other event that happened this week with Facebook, as we talked about, is that if you own the workers, they can start selling their shares now. What about Google? Google certainly had a beautiful run here, and now pull right on back to the 670 price level. Bounced off a little bit, still above its 200. So notice how weak Apple is compared. Apple below the 200 moving average. So far, the other ones have not. But I'm still going to say sideways. Goldman Sachs. Interesting, because when we talk about the difference between the S&P 500 and the NASDAQ, S&P 500 up at the 50 moving average, while the NASDAQ's down at the 200. Here's the reason why. One of the biggest leaders for the S&P 500 is finances. Here's Goldman Sachs rallying up here nice to the 500 moving average and kind of pausing here. So it'll be interesting to see what happens here. But Goldman Sachs, I'm going to have to actually say bullish on Goldman Sachs. And we talked about it, so why not show you? What about Groupon? 1 year old as far as the IPO is concerned. Look at that horrible chart, and all-time low of $3. So, really nothing going on here. Finally have a 200 moving day average coming in, and it's not even going to see that. Look at the resistance of the 50 moving average. I wouldn't touch Groupon at all. IBM. Kind of looks like Apple's chart. Real fast break off, ran up and found resistance on the 2 moving average. Here's another leader. I'm going to say sideways to down on this one. But IBM is definitely a big leader. Apple and IBM. Look at Intel. Now we know Intel follows the chart of IBM for the most part, but it's even weaker. It's kind of diverging itself from the IBM, and it has shown even more weakness. So definitely weak. down on Intel. MasterCard. Another reason why, again, the S&P looking good. Here's another finance one. Sideways, not going to go bullish like I did Goldman Sachs, but sideways on MasterCard. Netflix this week, Carl Icahn bought 10% stake in Netflix. You see it ran up to the 200 moving average, pulling back a little bit. We'll see what happens here at this 74 price level. And finally, Priceline. They had earnings. And nice little double bottom here and got right up here to the break. So we definitely need to see a close above that 645 level to run up to test 680. So I'm always asked, what exactly is high probability trading? Well, the first criteria for high probability trading is the ability to recognize the difference between a low risk trade and a high risk trade. You guys all know that I'm a firm believer in trading with the trend. It lowers the risk. Doesn't mean that you shouldn't be trading counter trend, but you should at least know that you are trading against the trend. Another way that we can kind of determine whether or not we're a high probability trader is whether or not we've actually back tested our system. You should know your numbers. You should know when I trade this setup what your percentages are. You know, we just had the winner of the World Series of Poker announced this week. I believe they said the final three played for 12 hours. I watched a little bit of it. But as I was watching it on ESPN and on Fox Sports News, they have, you know, the World Series of Poker also, the World Poker Tour there. And they always show the statistics. When the people put their cards all in or they call, they'll tell you this person is 60%, this person 40%. And the professional pokers, most of them, they know those numbers. And as soon as they see what their opponent has, they'll say, oh, this is a race, meaning it's 50-50. Or, you know, they'll say, I'm up 3-1. You should know your numbers. You should know when you enter this trade whether or not it's there's a 70% likelihood it's going to work. At this time, at this moment, when I use this trading setup, I know my numbers. And that gives us positive expectancy so that we know how to manage our money. If you don't know your numbers, if you don't know your percentages, you're not a high probability trader. You're a wishful trader. Finally, and most importantly, you have to have money management strategies. You need to know your risk to reward ratio. Where's my target? Where's my exit? Where am I trying to get out of this trade? Or where am I at least going to start taking some money off the table to protect my capital? And where is this trade just not working anymore? You have to know your numbers. And that's what high probability trading is all about. So guys, I'm so glad to be back, rested, rejuvenated, and we just want to make sure that you know that we're here to give you guys the information you need to make the right decisions about your financial situation. You can find us on Facebook. The name of our page is called Are You Financially Literate? Again, in order to make the right decisions, you have to raise your financial vocabulary. You have to understand the risk of what you're doing, but more importantly, you have to understand the leverage of what you're doing. We talk about that on our page. Also, you know, you can find us right here on YouTube, which is probably where you're watching us right now. We're Move Up with Mike on YouTube. On Twitter, we're also Move Up with Mike, where you can get updates on our latest services and videos. As I said, we're going to have some great things for you here in 2013. You can still follow us at Learn High Probability Trading to be a part of our coaching program, where we'll teach you how to be a high probability trader. And we're due to overwhelming demand, we're going to be putting together a signal service. We're going to put together a Forex signal service, and we may work with some partners on some option trading also. But again, all of this is to help you make the best decisions for your family and your financial situation. And we look forward to working with you now and in the future. Thanks, guys, and I'll see you next time.